We're less than a week left in the year, and that means time is ticking for people to get their tax documents in order.
Joining us this morning to share some end-of-the-year tax tips is Oklahoma Society of CPA member Doug Holsted. Doug, thanks for being with us this morning. I think I was one of like 9 or 10 people on the morning show, it seems, that got married this past year.
There's something in the water, obviously.
I was wondering, kind of, for myself, but other folks, what does getting married, how does that affect your taxes?
Well, if you're married, you're going to file married filing jointly or married filing separately. You'll determine that when you file your taxes. You can calculate it both ways. Most people get a better deal if they filed married filing jointly. The one thing I will tell you is people get this misconception that if you weren't married most of the year, you're single still. For tax purposes, you are whatever you are on December 31st. So since you were married, congratulations.
Thank you.
You get to file as married this year.
All right.
All right, let's talk about what do people need to know about retirement contributions when filing?
Well, if you have one more payroll coming this week, then you can maximize your SEP IRA contributions, your simple IRA contributions, or your 401k by putting more money into it. Your simple has a maximum amount for the year of $15,500. If you're over 50, you can add $3,500 to that. Your 401k has a $22,500 maximum, and if you're over 50, you can add $7,500 to that. So get a chance to put a little bit more money away and not pay tax on it.
That's the goal there. Hey, how can folks maximize their child care costs?
Well, for a child tax credit, you get $3,000 for one child, $6,000 for 2 or more children. So if you haven't paid your $3,000 or your $6,000, you need to get it paid this week. You can actually prepay a little bit of next year's cost to get to that number if you need to.
All right, and wrapping up, and I might be jumping the gun just a little bit, but I want to talk about those 2024 tax brackets. A lot of headlines out there about that. What's new about it?
Well, the brackets are adjusted for inflation, and inflation was pretty steep in 2023. So the brackets have gone up quite a bit, which means if you make more money, you're going to pay a little bit less tax.
Hey, a lot of people like to hear that. Doug, thank you for explaining that. Any last questions you have, Storm?
Yeah, any other recommendations for folks, Doug?
Well, one thing is if you own a business, this would be the week to turn in your personal expenses, the business expenses that you paid personally. Your mileage, maybe you haven't turned that in and got paid. Maybe you put some stuff on your personal credit card. You need to get that paid back so your business can get that deduction in 2023.
All right, getting ready to be a busy time of year for your profession, sir. Thank you.
You're welcome.